Hi, good morning, good afternoon, good evening to all our viewers. Yogesh Verma from Taxmantra Global, feel delighted to welcome you all on today's webinar. So, the topic for today's webinar is taxation on consideration received under RERA. This is a very important topic, and as the economy of India is growing, so is the purchasing power of every common man in India. And home being one of the utmost, everyone's wishes to buy the home or the flats. And this RERA is enables and it gives a kind of, uh, I can say it empowers the home buyers to negotiate on any mishappening on the builder side. So today we will be discussing in case if any consideration is received to a home buyer under the RERA Act. So by the end of this webinar, I expect that my viewer would be familiar and on the topics like home buyer agreement and its importance, RERA and how it's helpful for home buyer, charging section under RERA, components of compensation, analysis of interest definition under Income Tax Act, important judicial precedent, analysis of capital gain. So the first I would like to start with the home buyer agreement or the agreement for sale, which is most commonly known as sales agreement in India. So the home buyer agreement is legally binding contract between the builder promoter and the home buyer. Its importance lies in setting out the mutual rights, duties, and obligations of both parties and acts as the primary basis for enforcement under RERA. So, as the definition itself says, that it is the basic requirement in case of any mishappening wherein the builder doesn't provides the flat or the unit to the home buyer, then if the buyer wants to go into the legal or the judicial, then he can take the basic this home buyer agreement becomes the basic documents. So what are the importance of home buyer agreement? It's the legal foundation for claims. It is the core document referred to by RERA authorities and courts in disputes. Delays, deviations, or breaches are judged against the terms of this agreement. It defines the possession timeline. So, under the agreement, it would be clearly mentioned the date of possession and penalties for delay. It enables the buyer to claim compensation or interest under Section 18 of RERA, which we will discuss in the later part of this webinar. So the agreement also specifies property details with kind of demarcation, includes carpet area, specification, layout plan, amenities, and other deliverables. It ensures transparency and accountability from the developer. Another importance of home buyer agreement is it specifies payment schedules and charges, wherein the home buyer knows as on which period he is required to make the payment to the builder, and if there would be any delays in making such payments, then what are the late fees or such kind of charges which would be implied on the home buyer. It prevents unjustified demands by the builder. So once an agreed price has been entered by the builder and the home buyer, the builder cannot, negotiate with that price in a later stage of the completion or at the time of handover, because all the payment details are, primarily or in advance mentioned in that agreement. So it serves, it brings a clarity in the eye of the law, in the eye of the buyer, in the eye of the builder, that what is expected from the home buyer and what is not. So compliance with RERA format. Yes, post RERA developers must use a standard format as per the state RERA rules, prevents unfair or one-sided clauses promoting consumer protection. So, the things have been very much standardized with the RERA Act, wherein the format of this buyer agreement or the sales agreement is also provided by the RERA rules. The builder have to follow that particular format and the terms therein mentioned. So one thing is for sure that when you are going to enter into a home buy or home purchase transaction, this is one of the basic document which you must be clear of, which is states the terms, conditions, the considerations, the time period, the the demarcation, that what area you are getting. So it's the one of the most vital document when anybody is entering into home buy transaction. So moving to the next is like, introduction. This is with regard to RERA. Now, what is RERA? I'll be just outlining some of the important points under the RERA. So RERA empowers home buyers by enforcing transparency, accountability, and legal recourse, making real estate investments significantly safer. The RERA Act came into force for in the year 2016. How RERA is helpful for home buyers? Transparency in project details, as we have mentioned in the earlier slide, that there is a standard template which has been outlined by the RERA. The builder has to use same type of templates. So it brings a transparency in project details. Builder must register projects with RERA before advertising or selling. Buyers get access to verified project details, timelines, and land titles, approvals, etc. Time possession. RERA mandates a strict project completion timeline. Delay in delivery makes builder liable to pay interest to buyers. So this interest is a kind of compensation which the buyer will receive. Financial discipline by builder. 70% of buyer payments must be kept in separate escrow account used only for project development. Another important thing from the RERA angle is that there's a clear definition of carpet area. Only the net usable floor area is to be charged, avoiding inflated pricing. Grievance redressal mechanism. Buyers can file complaints with the RERA authority for appellate or the appellate tribunal for quick resolution. Right to information. Buyers have the right to access detailed project information at any time. Defect liability. If structural or workmanship defects are found within 5 years, builder must fix them at no cost. So it's a kind of fencing the rights of the buyer. It's a very welcoming move by the government of India of this introduction of this RERA Act in the real estate industries. It significantly protects the buyer's right. So this was the outline of the RERA, and previously we discussed the buyer-sellers agreement. Let's move further. So what is the section 18 of what's the empowering section? So it's a section 18 of the Real Estate Regulation and Development Act 2016, return of amount and compensation. Key provision of section 18 is section 18(1). If the promoter fails to complete or is unable to give possession of an apartment, plot, building in accordance with the terms of the agreement for sale, the allottee has the option to withdraw from the project and claim a refund of the amount paid along with interest and compensation, or continue with the project and receive the interest for the delay. Section 18(2). If any loss is caused to the allottee, which is the home buyer, due to defective title of the land, the promoter is liable to compensate the allottee. Section 18(3). If the promoter fails to discharge any obligation imposed under the act or rules or regulation, he is liable to pay compensation to allottee. So this is an empowering section which gets triggered in case of any mishappening or any failure of promises made by the builder to the allottee, which is the home buyer. In addition to section 18, section 71 is also relevant. How? So it's an adjudication of compensation. It empowers the adjudicating officer to determine compensation under section 12, false or incorrect information. Section 14, violation of terms of sales agreement. Section 18, as we discussed above. And section 19 is rights and obligation of allottees. So these are the empowering section under the RERA Act, which can be used by the allottee in case of any injustice to them. So now, what are the component of compensation? So we today's discussion, I'm restricting it to wherein the buyer has entered into the sales agreement and the builder has failed to provide the flat or the unit to him, and now the buyer is demanding his actual monies which he has paid initially to buy the unit, and he gets a compensation in terms of interest from the buyer. Now, what are the components? Capital portion, which was initially paid by buyer, and interest, which is calculated with reference to bank interest rate. Now, this is a very interesting discussion on interest rate and the compensation. I will definitely interlink it and how the taxation on this part is computed. So the big question comes that whether receipt of compensation, which has been calculated in the reference to the bank interest rate as per the order under RERA Act, is taxable under Income Tax Act 1961. If yes, then under which head of income? The fact is this, that under Income Tax Act there is no specific provision which deals with such compensation. Hence, we need to refer to the provisions in their individuality to determine the taxability of such income. Let's analyze these individual, provisions under the Income Tax Act. So the first section is the section 228A of Income Tax Act, which gives the definition of interest. Now the definition of interest says that interest means interest payable in any manner in respect of any monies borrowed or debt incurred, including a deposit, claim, or other similar rights or obligations, and includes any service charges or other charges in respect of monies borrowed or debt incurred or in respect of any credit facility which has not been utilized. So this is the core definition under section 228. Let us analyze this section. Now, what are the factors which were given in the above definition? Was any money borrowed? Now, the analysis of this transaction says that no, the buyer paid the seller for exchange of goods, which was the unit or the flat. Such payment of money cannot be said as money borrowed. Second is, was any debt incurred, including a deposit claim or other similar rights or obligation? No, the debt didn't incurred, as no deposit was made in this transaction. So it was a mere, I pay the money and I get the good. It was a simple transaction. There wasn't anything as called as deposit. There wasn't anything which establishes the relation of a debtor or creditor in such kind of transaction. Now I will refer to all this analysis with the judicial precedents. Another important factor comes that the TDS. Now, suppose if RERA, under the RERA Act, the order has been passed that the allottee shall get a compensation and the builder shall make the payment. Now, the challenge for the builder is to deduct the TDS. That okay, if I am paying this compensation, if I am paying this interest, then it may happen. I mean, the builder are into the dilemma that they are liable to deduct TDS before making such payment. So all these judicial precedents will bring clarity in the mind of the builder and in the mind of the allottee that whether TDS is shall be deducted on such compensation or not. Let us read this judicial precedents. No, the payer, I mean the builder, need not have to deduct TDS under Section 194A of the Income Tax Act. Why? Because Honorable High Court of Bombay in case of Sainath Rajkumar Sarode versus State of Maharashtra 2021 stated that interest by way of compensation falls outside purview of Section 194A and 228A of Income Tax Act. Now 194A particularly establishes deduction of TDS in case of interest other than securities. Now such interests are payable where there is a debtor creditor, or where there is a deposit, or where there is a money, you know, money borrowed. In such kind of cases, the interest portion emerges and the SSE is liable to deduct TDS under section 194A. But in these cases, the compensation, I mean the interest which the allottee is receiving, is just a mechanism to calculate the compensation. Okay, let us see the another judicial precedent, which is of the Calcutta High Court. In the case of Principal CIT versus West Bengal Housing Infrastructure Development Corporation, stated that since there is neither any borrowing of money nor incurring of debt on the part of the SSE, interest as defined under Section 228A of the Income Tax Act have no application to such payment. Consequently, there was no obligation on the part of the SSE, that is the builder, to deduct TDS, and consequently no disallowance under section 40A IA could be made. So this decision was also confirmed by the Supreme Court of India, and Supreme Court of India stated that the decision made by the Calcutta High Court is right and correct. So where there the builder has a kind of insecurity that suppose if he makes the payment and if he doesn't deducts the TDS, then his payment would be disallowed under Income Tax Act, because TDS has not been deducted under section 40A IA, which is 30% of the, 30% would be disallowed. So this decision, this judicial precedent makes it very much clear that TDS is neither required to be deducted in such kind of payments, neither there would be disallowance in the hands of the builder for making such payments under section 40A IA. So what's the conclusion? So interest is just a tool to compute the compensation. There is no debtor-creditor relationship in this type of compensation. Hence, section 228A of Income Tax Act is not triggered. So now the question comes that, this compensation, this interest payment by the builder to the allottee, if it is not interest, and if since it is not interest, then it will not fall under the head income from other sources. Now under which head such compensation shall fall? Let us take this discussion to another interesting portion of this webinar, which is, okay, before I take it to the other heads of income, I would also like to discuss another important judicial precedent, which is the CIT versus HP Housing Board 2012, wherein the SSE board was liable to pay interest to allottees for the delay in construction. The High Court of Himachal Pradesh held as follows. In the case in hand, it stands proved that in case the houses were ready within the stipulated period, the board would not be liable to pay interest. Yes, why would the board or why would the builder be liable to pay interest if they have handed over the unit or the flat in the right time to the allottee or the home buyer? Okay, when construction of house is delayed, there can be escalation in the cost of construction. The allottee loses the right to use the house and is deprived of the rental income from such house. So this is a financial loss to the allottee or the home buyer. He is also deprived of the right of living in his own house. So again, there is another kind of loss which the home buyer faces. So in such circumstances, the amount which is paid by the board is not payment of interest, but in our view is payment of damage to compensate the allottee of the delay in the construction of his house or flat and the harassment caused to him. So it may be true that this compensation has been calculated in terms of interest, but this is because the parties by mutual agreement, which is the sales agreement, which we discussed in the beginning of our webinar, agreed to find out a suitable and convenient system of calculating the damage, which would be uniform across the board for all the allottees. So this was the decision again in the CIT versus HP Housing Board. So again, it is being said the same thing, that compensation which is paid by the builder to the home buyer in the form of interest is just a mechanism or tool to compensate for the damage. It is not the actual interest as per the income tax, as per the definition of the Income Tax Act under Section 228A. Hence, let us see how this compensation or the interest portion has to be dealt. It's a very interesting discussion. So whether the amount of interest received by the allottee of flats as per order under RERA is capital received and liable to capital gain under section 45. So now this is an interesting section which is unfolding in this discussion. So let us see that what's the definition, what are the relevant definition under the capital gain section. The first section I would refer is section 214 of the Income Tax Act 1961, which gives the definition of capital asset. So by and large, there are many definitions, but I have particularly included those definitions which are relevant in this case. So the definition of capital asset says that property of any kind held by an assessee, whether or not connected with his business or profession. Obviously, when the allottee has entered into an agreement to buy a home, that has got no nexus with its business or profession, but it's a property. Why? Because explanation 1 of section 214 says that for the removal of doubt, it is hereby clarified that property includes and shall be deemed to have always included any rights in, this is a very important word, any rights in or in relation to an Indian company. So there was this definition, the property definition includes any rights in. And to continue with this definition, or in relation to an Indian company, including rights of management or control or any other rights whatsoever. This is in context to Indian company, but we are restricting our discussion with this property. So was there any right to the allottee? Was there, can we say that there was a property or any right in the property? I would say definitely yes. Why? Because when there was a sales agreement entered between the buyer and the seller, I mean the builder and the home buyer, that sale agreement gave in the right to the allottee that he has a right to get this property at a after a interval of a particular time. So it establishes a kind of capital asset. Now let me analyze this, that when the allottee entered into the agreement, which is the buyer agreement or the sale agreement with builder, such an agreement gave the right to allottee to pose the flat or unit on a future date. Okay, so this was intangible in nature when this agreement was being entered. Thus, while entering into agreement, it can be said that the assessee, the allottee, was in possession of capital asset as per the definition of section 214. Okay. Now let us see that what the other section of capital gain, which is section 247 of the Income Tax Act, says the definition of transfer. The definition of transfer includes the sale, exchange, or relinquishment of the assets or the extinguishment of any rights therein. Okay, this is an important word. So when I analyze this definition, that the right of the allottee is extinguished, that is when he demands his money back with compensation and a builder pays, this triggers transfer under section 247 of the Income Tax Act. So let's see what's the conclusion. The conclusion is this, that thus when such compensation is received along with a refund of actual money paid by the allottee, then it can be said that the allottee has extinguished his right in a capital asset, and thus the total of compensation received by him can be said as sale proceeds, and therefore the difference between the sale proceeds and the actual payments done by the home buyer or the allottee can be termed as capital gain. So the difference will fall under the head capital gain and not other sources, and thus capital gain tax will trigger depending upon the period of holding. So this is how a total compensation, which was the initial amount paid by the allottee, and a compensation which was interest, which was calculated on such payment, would be clubbed. And when this payment is received from the builder, it should be seen as a transfer of a capital asset, and thus the difference between the actual payments made by the buyer in the initial stage of project versus when he is not allotted any unit within the time period, and the allottee makes a choice that he wants to move out of this project, and the RERA Act step gives an order to compensate to these employees, then this difference shall be taxed under the head capital gain. And the period of holding, they are generally long term, so 12.5% would be the tax rate, or whatever is the applicable tax rate should be computed on such capital gain. So this is how I have analyzed this particular consideration when it is received under the RERA Act. I hope our viewers have enjoyed this discussion. Thank you all for your patience hearing.